Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Thursday, the 24th of July. I'm Caroline Hepker in London.
And I'm Stephen Carroll in Brussels. Coming up today, the European Union is closing in on a trade deal that would set a 15% tariff for most of its goods.
Narendra Modi jets into London to sign a landmark UK-India trade agreement worth £4.8 billion.
Plus, after the UK Supreme Court quashed the convictions of two traders over rigging rates, what's the future of prosecuting financial crime in Britain?
Let's start with a roundup of our top stories.
The European Union and the United States are progressing towards a trade agreement that would set a 15% tariff for most imports into the US. According to diplomats briefed on the negotiations, EU member states could be ready to accept duties at that level as European officials push for the rate to cover sectors including cars. The talk of a possible deal comes as the US President Donald Trump suggested that he would not go below 15% as he sets so-called reciprocal tariff rates.
We're going to have a very, very simple tariff for some of the countries. There's so many countries you can't negotiate deals with everyone, so we'll have a straight, simple tariff of anywhere between 15 and 50%. A couple we have 15 because we haven't been getting along with those countries too well, so we just say, let's pay 50, and that's the way it is.
Trump added that if the European Union agrees to open up to American businesses, then we will let them pay a lower tariff. Other countries, including South Korea and India, are also pushing for an agreement before the heightened tariffs go into effect in just over a week's time.
The trade negotiations come as top representatives from the European Union have been meeting with Chinese President Xi Jinping. However, tensions spanning trade to the war in Ukraine are casting a shadow over an event that coincides with the 50th anniversary of the establishment of China-EU diplomatic ties. The Chinese leader met with European Commission President Ursula von der Leyen and the head of the European Council, Antonio Costa, according to the official Xinhua news agency. And state broadcaster CCTV says that Xi used his opening remarks at the summit to urge the EU to strengthen trust and communication with China amid global uncertainty. The first meeting of its kind since 2023 comes as Bloomberg has learnt that European metals traders are engaged in an increasingly frantic scramble to secure rare earth metal supplies after it became all but impossible to directly source them from China.
The UK and India plan to sign their long-awaited free trade agreement today in a move which the British government says will add £4.8 billion to the size of the economy. Bloomberg's Ewan Potts has more.
The deal with India is the biggest trade agreement secured by the UK since Brexit 5 years ago. The signing comes as part of Indian Prime Minister Narendra Modi's two-day visit to Britain and follows 3 years of intense negotiations. India, which is a significantly more protectionist economy than the UK, will reduce 90% of its tariff lines, cutting the average levy on British imports from 15% to 3%. In the other direction, fully 99% of Indian goods exports will benefit from zero duties. In London, I'm Ewan Potts, Bloomberg Radio.
Now, when it comes to UK car making, it has hit its lowest level since 1953. According to the Society of Motor Manufacturers and Traders, car output fell by 7.3% in the 6 months to June, whilst van production is down by 45%. The UK car industry remains export-focused, with the EU and then the US being the main destinations. Uncertainty over US tariffs meant that some firms slowed or stopped production in the first half of this year, although a transatlantic tariff deal briefly bolstered output in June. The SMMT says that with the right conditions, UK automotive can reverse the current decline, but current estimates show that only 755,000 vehicles are expected to roll off production lines this year in 2025.
Just some breaking earnings news this morning. BNP Paribas reported better than expected profits in the second quarter. The French lender getting a boost from its fixed income traders, while equities slumped in the volatility triggered by the US tariff announcements. So revenue from trading debt, securities and currencies jumped by 27% from a year earlier, beating estimates. Equities income, though, declined by 15% in a stark contrast with double-digit gains at the biggest US firms. BNP Paribas now sees its full-year net income above €12.2 billion, higher than estimates.
Meanwhile, at Deutsche Bank, their results for fixed income and commodity sales and trading in the second quarter, revenue was a beat at 2.28 billion euros. The estimate had been for 2.2 billion. So a beat of average analyst estimates. Fixed income traders joined Wall Street peers in reaping the profits from volatility following the US administration's tariff announcement. So it's an 11% increase for the German lenders securities unit in Deutsche Bank earnings this morning.
Well, to earnings from Wall Street, Tesla's CEO Elon Musk has warned of difficult times ahead as the firm reported results below estimates. The carmaker posted adjusted earnings of 40 cents a share, missing Wall Street's already lowered expectations. Revenue fell by 12% to $22.5 billion, the sharpest decline in a decade. Speaking to analysts, Musk blamed the loss of benefits for the company's performance.
We're in this weird transition period where we will lose a lot of incentives in the U.S. There's a lot of incentives actually in many other parts of the world, but we'll lose them in the U.S. But we'll still be at the relatively early stages of autonomy. On the other hand, autonomy is most advanced and most available from a regulatory standpoint in the U.S.
Elon Musk speaking there. Tesla's shares fell as he spoke, sliding as much as 5.3% in after-hours trading in New York. The stock has already tumbled by 18% this year through the close of trading yesterday.
Alphabet beat Wall Street expectations for second quarter revenue, but shares slipped after the tech giant warned of higher spending ahead. The Google parent posted $81.7 billion in sales, excluding partner payouts, which exceeded estimates. But capital expenditures are now forecast to hit $85 billion in 2025, so up from $75 billion that it previously expected. Mandeep Singh is senior tech analyst for Bloomberg Intelligence.
1/3 of their business is cloud and YouTube.
Right.
And that's still growing north of 25%. So to my mind, they are showing ROI on all that AI spend. And if they have more AI infrastructure capacity, the cloud business would be growing even faster.
Mandeep Singh speaking there as Alphabet shares fell about 1.4% in extended New York trading.
And the number of companies and organisations compromised by a security vulnerability in Microsoft's SharePoint servers is rising rapidly. According to cybersecurity firm iSecurity, hackers have now breached approximately 400 government agencies, corporations and other entities. These hacks are among the latest major cybersecurity breaches that Microsoft has partially attributed to China. The incidents occur amid heightened tensions between Washington and Beijing over global security and trade.
And those are our top stories for you this morning. Looking at the markets, Nasdaq futures currently up by 0.3%. S&P 500 E-mini futures also close to a record high. You had those strong Alphabet earnings. That's also given some impetus to Asian equities this morning, especially the chip stocks, the AI boom. So you've got the MSCI Asia Pacific Index up by 0.9%. Also a possible US-EU trade deal, maybe before that August 1st deadline, possibly. Means that we saw European stocks close up by 1.1% yesterday, and stock futures also really flying today, up by 1.3% right now. The Bloomberg Dollar Spot Index, though, weakening for a fifth day in a row. Howard Lutnick calling for lower interest rates and for the Fed Chair Jerome Powell to exit. So that's also quite important when we think about the bond markets. 10-year Treasury yields this morning trading at 4.39, up a basis point. Those are the markets.
In a moment, we'll bring you the latest on the US-EU trade negotiations, plus what yesterday's UK Supreme Court ruling quashing the convictions of two traders over rigging the interbank lending rates, LIBOR and Euribor, mean for the future of prosecuting financial crimes in Britain. But another story that we've been reading this morning that's got us thinking and talking. An Odyssey is now apparently going to the cinema because the casual form of entertainment is dead, Caroline. Now we have to plan everything years in advance.
An entire year. This is Christopher Nolan's film adaptation of Homer's poem, The Odyssey. It's coming out in a year's time, and the director of Oppenheimer, of course, is hoping that it will be an event. I'm using air quotes there. Jason Bailey's been writing about this for Bloomberg. I really like it. Tickets being sold in advance. The thing is, the tickets completely sold out in the US in minutes for IMAX cinemas, because this is going to be a kind of mega movie on 70mm film for any film buffs out there. There are actually only 16 IMAX cinemas in the US anyway, so they sold out in minutes, which sent me scurrying to the IMAX cinemas in the UK. And yes, it sold out at the BFI. Apparently the Science Museum's also got an IMAX, sold out there too. So
this is the part I can't handle. As someone who is chronically organised, there's a few things in life that I feel like you can leave to the last minute. One of them was going to the cinema, and now that's gone too. I'll just stay at home.
Forget about it. The thing is, at least you don't have to read the book, maybe, if Christopher Nolan does a good job. Look, I hope he does. My Emily Wilson translation of The Odyssey is still on my bookshelf.
Okay, I'll read it off to you. There we go. Make that deal.
Yeah.
Let's bring you up to date, though, on the trade story this morning. Donald Trump suggesting he won't allow his baseline tariff rate to go below 15%. As EU diplomats tell us, they're making progress on an agreement at that level.
Stephen, this is a story you've been following closely in Brussels, of course. In terms of what the latest is on the talks, where are they now?
What it seems to be is a return to that sort of cautious optimism of where we were just over a week ago. Now, diplomats briefed in the negotiations tell us that they're making progress towards that deal. So 15% is the baseline for most imports that they're looking at. The sense is that's a level that member states could accept, especially if the EU can get that level agreed for cars. They're currently subject, of course, to the 25% tariff. So like the situation we saw in Japan, a 15% deal would be an improvement for that sector. Of course, very important in countries like Germany. They're also working on a quota system for steel and aluminium, which would see imports above the quotas that would be agreed facing a 50% tariff. That's an issue that we know has come up in the UK-US trade deal as well. Of course, all of this is efforts to try and avoid the 30% tariff that Donald Trump has threatened the EU with from the 1st of August. If there isn't a deal by then, the EU is also preparing for that. They've identified more than 90 billion euros worth of American goods that would face also a 30% tariff, including Boeing planes, American cars and bourbon whiskey. Then there's the question that they could go even further. They could take out their most powerful trade tool in the EU, which is the anti-coercion instrument. That's something that could actually restrict US companies' access to the EU market, which would be a massive escalation of this as well. But the focus for now is on getting that deal.
What do we know about where the US is on this agreement potentially?
Look, one US official told us the negotiations remain fluid and the deal may not be announced imminently, so perhaps let's not hold our breath just yet. But it was interesting to hear President Trump say that his baseline wouldn't go below 15% and could go as high as 50%, which seems to be an escalation of the previous range he's given when he was talking about a 10 to 15% rate. We spoke to the US Commerce Secretary Howard Lutnick yesterday. Let's take a listen to what he told our colleague Anne-Marie Hordern about those negotiations with the EU.
If they say to the president, we will open our market to you. And I mean really open it, meaning we will take U.S. cars, think of what the Japanese did. They said, we will take U.S. cars based on U.S. standards. So you don't have to make a different car. You can take the car you make in Detroit, put it on a boat, and send it. If the Europeans will accept that, and they will accept really accepting U.S. products in Europe, that's a giant. That's hundreds of billions of dollars of export opportunity for Americans. That's going to move the president because he's going to say that opportunity for Americans is so great.
Do you think you get there next week?
Well, we've been talking about it for months. I mean, holy moly, I can't count.
They're saying they're going to retaliate if they don't get a deal by August 1st.
I understand. Then the president wrote them a letter saying, if you don't get a deal done, we're charging you 30%.
This is all negotiating tactics out in public.
Well, of course it is. I mean, Donald Trump writes a letter and says, if you don't make a deal, it's 30%. And the thing about Donald Trump is he's dead serious. If you don't make a deal, it's 30%. Now, that puts the pressure on them, right, to say, okay, that's my alternative. They want to get a deal done. For sure they want to get a deal done. But does Donald Trump want to get a deal done? How much does he value the fact that they open their market? Do they completely open their market? Because that's what he's looking for. I think they will. I think they will really open their market. And I mean open it, which is something the United States of America has never had.
So that was Howard Lutnick speaking to Anne-Marie Hordern. It gives us an idea of where the US is in these negotiations, but some of the things that he's raised there are extremely sensitive subjects. The EU fiercely protects the standards within its internal market, so changing those for one trading partner would be a very big deal. But it gives us that idea again, quite similar to the deal with Japan, of how having something which Donald Trump can be happy with is perhaps more important than the individual level of detail. Remember, we are talking about the world's biggest trading relationship, 30% of global trade, worth almost 40% of global GDP. The risks of this escalating for both sides and for the whole global economy are also huge.
Gosh, that would be certainly a tricky proposition. Look, I think the comparison, as I sit in London, is perhaps to the UK's position. The UK has secured its at least framework deal with the US, and also today, of course, the UK is hosting the Indian Prime Minister Narendra Modi, because in May the UK managed to agree a free trade agreement after 3 years of tough negotiation with India. India is still negotiating with the EU for an agreement there on trade. So again, it feels like a real moment for the Keir Starmer administration in Britain. Modi's on a 2-day visit to the UK. He's going to meet with Starmer. He's going to sign this FTA. He's going to meet with King Charles. This is the 4th visit for Modi since becoming Prime Minister. Now, in terms of tariffs for the UK, on more than 90% of UK exports, tariffs are going to be cut. So that includes slashing tariffs on things like Scotch whisky, on salmon, on lamb. There'll be a quota-based tariff reduction for electric vehicle exports. Overall, the average levy on UK products is going to drop down from 15% to 3%. So look, Keir Starmer's saying that this deal is going to increase wages for British workers. It's the biggest trade agreement since Brexit 5 years ago. So no wonder Starmer's used lots of, positive language, a landmark deal, a major win for the UK. The UK didn't allow wider visa access, which India was pushing hard for. For India, though, it's also the most significant trade deal that the country's ever signed. And, the UK already imports £11 billion worth of goods from India every year. So this is also going to, add to that relationship. The agreement still needs to be ratified by both countries, and the UK and India are also negotiating an investment partnership. But I think you're going to hear a lot today from Keir Starmer's government about, how Britain under this Labour government's managed to secure now a series of trade agreements.
And I do wonder who's writing the book about how the trade in whiskey illustrates global trade relations, coming up in both of those key trade negotiations that we've been talking about.
Yeah,
well, let's turn to a different story now. The UK Supreme Court quashing the convictions of Tom Hayes and Carlo Palumbo in a stunning reversal of criminal convictions in the LIBOR and Euribor rigging cases. Tom Hayes, the former star UBS trader, became the face of the LIBOR rigging scandal when he was arrested more than 13 years ago. Our legal reporter Luca Di Paoli is with us for more. Luca, good morning. Just take us through the decision. Why were these convictions quashed?
So both Tom Hayes and Carlo Palumbo were convicted after really long jury trials in which judges directed the jury as to what they should consider when they reach their verdict. Obviously, the jury makes the decision, but the decision that they have to make is set by the judge. The crucial thing that the jury was told was that Hayes had made LIBOR submissions, effectively submissions designed to help set an interest rate, were misleading, and they were not really asked to look at whether that was actually the case in court. In the jury room. The Justice of the Supreme Court ruled that the judge should not have done this, and that the jury needed to decide this point as a matter of fact. So the jury were never given the opportunity, and as a result, Hayes and then after him, Palumbo, were never really given a fair jury trial. Therefore, both convictions were quashed.
There were also 7 other men who were convicted over rate rigging. What does this decision now mean maybe for them, and what do we take away from this now?
So 7, including Hayes, lost trials, and then there were another 2 that pleaded guilty, and then on top of that, there were a lot of people where cases were brought that were unsuccessful. I think all of those convictions are very much up in the air now. Hayes was the first. So Hayes was sentenced in 2015, and then after that, in 2016, there was another slew of cases, and then 2019, there was Palumbo. 2018, before that, there was Christian Bitar, and a couple of others. So Hayes was the first mover. It was that case that came under the most scrutiny and the most criticism by the court. So in that relief, it's very hard to see how the people who were convicted won't seek to overturn. And there was a big press conference yesterday in which some of the lawyers for Palumbo and Hayes spoke. And I got the distinct impression that there probably will be.
Luca, what does this mean then for the Serious Fraud Office that brought these cases and its ability to prosecute financial crime in Britain?
So this is really bad for the SFO. There have often been existential questions about the SFO. There were actually existential questions about the SFO around the time of the LIBOR convictions, and this was sort of held up as an example of how it can work. The SFO was created to deal with really complex, often financial fraud cases, which general law enforcement might struggle with. And LIBOR was seen as this sort of one example of them really being effective. They have a number of other cases which have gone really badly, including ENRC, which is a company which they took legal action against, which might actually end up costing them rather a lot of money. So yeah, it's existential again for the SFO, I think, after this. And the other difficulty they have is cases that they are bringing now are coming up against a justice system that's moving incredibly slowly because of the backlog of cases. So the ability of them to ameliorate their reputation with a new conviction is quite difficult because some of their cases they're bringing aren't going to be heard until 2028, 2029. So yeah, it's as bad as it's been, I think, in terms of the prospects for the SFO.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.